Welcome back. And before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the UAE is considered to be one of the world's largest crude oil producers, ranked 7th globally. By 2018, the country aims to increase its production capacity from the current 2.8 million barrels per day to 3.5 million in order to cater to growing international demand. The 21st annual Middle East Petroleum and Gas Conference started in Abu Dhabi today and is being hosted by the capital's oil company ADNOC. The company's Director General, His Excellency Abdullah Nasser Al Suwaidi, stated that by the end of 2013, they plan to expand capacity by 200,000 barrels per day and to invest approximately $10 billion towards projects, which will boost crude oil output by 60%. Al Suwaidi agreed with His Excellency Suhail Mohammed Al Mazrui, the Minister of Energy's statement that the exploration of oil could be complex and costly in the future, adding that the possibility of discovering oil in the UAE is low. However, he reaffirmed that the use of enhanced oil recovery technologies will contribute towards extraction. Over the next 2 days, the event will provide industry insight-based topics such as LNG, global oil markets and pricing.
The development of sour gas is one of those challenging technologies that we managed here in Abu Dhabi to embrace, and the project is going with the joint venture. There are also hopes on the unconventional in the area, and ADNOC is looking at that seriously. So those are some of the technologies, and ADNOC can elaborate more on the specifics. LNG is one of the sources, the new sources of energy or of the gas to the network, and in UAE we are concerned about the diversification of the gas. There is a project called Emirates LNG. In addition, and this is in addition to the project that is already in Dubai, the importation of LNG or regasification of LNG. The project FID, I believe, is in the middle of this year, and the sources of the gas is going to be the market.
We will have to go into more difficult fields. And same thing for example, in areas deep water. It's very challenging, both technically and commercially. And I think that's what he means. Even shale oil is expensive and difficult, and it's not easy. There has to be development in the technology, especially drilling technology, production technology, and that is going to happen. But that doesn't mean, of course, there is no attempts to will continue.
Etihad Airways has taken delivery of its first aircraft financed by a local UAE bank since 2008. First Gulf Bank has provided the finance for 2 Boeing 777-300ER aircrafts, and the second is expected to be delivered to Etihad in May of this year. The total facility value offered by First Gulf Bank is through a Sharia-compliant structure at approximately $359 million, with a financing structure term of 12 years. Within the agreement, First Gulf Bank participates as the initial lead arranger, the underwriter, the facility agent, and the security trustee. Dubai's school operator Gems Education has been awarded a 2 billion dirham loan to fund an expansion into the Middle East and North Africa, as well as to refinance investments. According to reports, Gems announced that the 6-year facility, with Islamic and conventional parts, was arranged by Abu Dhabi Islamic Bank, Mashreq Bank, Dubai Islamic Bank and Noor Islamic Bank, while United Arab Bank also took part. The bank facility will also help the school operators' expansion plans to build 10 new schools across the UAE over the next 2 years. And looking to other business news now, gold recovered in trading last week, following one of the largest drops in which the yellow metal shed 18% in 4 days. After touching 1,320 per troy ounce on Tuesday, gold managed 4 consecutive days of higher closings to close the week above a key psychological level of 1,400, despite being 0.8% lower on the week. Well, we earlier spoke with Gaurav Kashyap, the head of the DGCX trading desk at Al Pari Middle East, to see if gold has finally consolidated and what he is watching out for in the week ahead.
Well, consolidation is the name of the game for gold traders. Following the week before's vicious sell-off where we saw the yellow metal hit 1320 levels, we saw a lot of physical buying coming in and a lot of short positions were beginning to cover their shorts, which has seen the gold price move upwards towards 1400 levels. And honestly, Laura, the closing above 1400 can be taken as a positive by people who are already long in the asset. Overall, gold would need to close the month of April above 1412 levels, which remains the 50-month moving average, to continue any type of positive momentum in the weeks ahead. Overall, we're looking at a target probably of around 1438, where we should see upsides being capped. If we look at the rest of the economic calendar, we have a relatively light economic calendar in the week ahead. We will be focusing on GDP readings coming from the UK on Thursday, as well as the US GDP reading on Friday. Now, if we start with the former, the UK economy has come under some slack following Fitch's downgrade last week. This follows the Moody's downgrade from March earlier in the year. But of course, judging by the pricing action, the GBP was able to hold above 152 levels against the US dollar. So we will expect it to trade between 152 and 154 in the week ahead. Once again, we continue to like shorting opportunities at about 154. If we look at the US dollar, if we look at the US GDP reading on Friday, the prospects for the US recovery seem a lot better. Expectations are for the quarter GDP to come in at 3.1%. So if we see a reading below that, this could once again trigger a risk-off sentiment, which could see equity markets being driven lower. Along with the light economic calendar, we will continue to watch the US earnings season, with heavyweights such as Apple and ExxonMobil announcing earnings in the week ahead. So once again, positive earnings will continue to see stock markets rally, and this will see the risk off trade prospering in the week ahead.